Hey everyone, welcome back to Corporate Decoder. Today we are diving into a report from PERRIGO, a company that makes a ton of over-the-counter health products. This report is like a sneak peek into how well your favorite cough drops and pain relievers are selling. Spoiler alert, there are some interesting things happening behind the scenes that could affect your wallet and the company's future. This report is called an 8K, a snapshot of important events that companies must share with investors. Think of it as a corporate tell-all. Whenever big news happens, they have to let everyone know. This one is dated February 27, 2025. The main thing here is PERRIGO released its earnings for the last 3 months of 2024. That's like the company's financial report card for the last quarter. This section will give us a look at how much money they made, what their expenses were, and ultimately how profitable they were. The actual numbers and details are in something called Exhibit 99.1. It's a press release, which is a fancy way of saying it's the company's official announcement about their performance. Companies always try to paint a pretty picture in these releases, so we need to read between the lines to see the real story. Here's where things get a little technical, but don't worry, I will break it down. PERRIGO talks about non-GAAP financial measures. GAAP stands for Generally Accepted Accounting Principles, which are the standard rules for how companies in the US must report their financial information. Non-GAAP measures are like an alternative way of looking at the numbers. Companies use these non-GAAP measures to give investors a better sense of how their business is really doing. They take out things they think are unusual or don't really reflect their core business. It's like cleaning up your room before your parents come in, so they only see the important stuff, or at least what you consider important. One example of something PERRIGO removes is intangible asset amortization. Intangible assets are things the company owns that you can't physically touch, like brand names, patents, and trademarks. Amortization is like depreciation, but for those intangible things, it's how they spread the cost of these assets over their useful life. PERRIGO takes this out because they don't think it really reflects how their business is performing day to day. PERRIGO's management uses these non-GAAP numbers to make decisions about the company. They use them for planning, forecasting, and figuring out how well different parts of the business are doing. They even use these numbers when deciding how much to pay employees. By sharing these numbers, PERRIGO is trying to show investors what they think is important. Some of the specific non-GAAP measures PERRIGO mentions include adjusted gross profit, adjusted net income, and adjusted operating income. These are all different ways of calculating profit, but with the unusual items taken out. They also talk about things like constant currency net sales, which shows how sales would have looked if exchange rates had stayed the same. PERRIGO argues that these non-GAAP measures help investors compare their results over time and to other companies. By taking out the noise, it's easier to see the underlying trends. However, it's important to remember that these are still just the company's opinion of what matters. Investors need to look at both the GAAP and non-GAAP numbers to get a full picture. One key takeaway is that PERRIGO wants investors to focus on their underlying business performance, not just the headline numbers. They want you to see how well their products are selling and how efficiently they are running the company without being distracted by things like one-time charges or accounting adjustments. The company provides a breakdown of what they adjusted from their results. For the last 3 months of 2024, they adjusted for things like amortization, unusual lawsuits, restructuring costs, and something called infant formula remediation. We will talk more about this in a moment. They also took out gains or losses from selling off parts of the company or investments. Looking back to the same period in 2023, they made similar adjustments, but also included things like acquisition and integration-related charges. This suggests that PERRIGO was busy buying and merging with other companies around that time. When we zoom out and look at the whole year of 2024, the adjustments are pretty consistent with what we saw in the last 3 months. Again, amortization, restructuring, lawsuits, and infant formula remediation are all major factors. In 2023, there were some unique items like milestone payments received related to royalty rights. This means PERRIGO was getting paid for licensing out some of their technologies or brands to other companies. There is an important disclaimer here. The company emphasizes that this report is furnished, not filed. Essentially, PERRIGO is saying they are sharing this information, but it's not subject to the same level of legal liability as other documents filed with the Securities and Exchange Commission, or SEC. Finally, the report is signed by Eduardo Bezerra, the Chief Financial Officer. This means he is responsible for the accuracy of the information. So, what does all of this mean? PERRIGO is trying to present a picture of consistent growth and profitability, but they are using non-GAAP measures to get there. While these measures can be helpful for understanding the underlying business, investors need to be cautious about relying on them too heavily. It is important to check what exactly they are removing when making these adjustments. Now let's talk about that infant formula remediation. This is a really important issue because it means PERRIGO has had some problems with its infant formula products. It's not clear exactly what these problems are, but the fact that they are spending money to remediate them suggests they could be serious. This is something investors should definitely keep an eye on. Overall, PERRIGO seems to be a company in transition. They are making acquisitions and divestitures, dealing with legal issues, and trying to navigate a changing market. While they are profitable, there are also some risks and uncertainties that investors need to be aware of. From the numbers, it seems that PERRIGO is working hard to maintain its position in a competitive market. The focus on non-GAAP measures suggests they are trying to highlight the positive aspects of their business while downplaying some of the challenges. Whether they are succeeding remains to be seen. Thanks for watching. If you found this helpful, please like, comment, and subscribe for more deep dives into the world of corporate filings.